Welcome to the Lazy Money Machine, where we show you the easy, no-nonsense way to financial and time freedom. Here are your hosts, Graham Brown and Eric Tenhaver.
It's my turn today on the Lazy Money Group.
Definitely.
I want to talk about Japan, and I want to talk about our ongoing discussion about property around the world, property investment, and one of the things we're always interested in as investors is comparative yield. So how do properties compare between countries,
right.
Different countries, different interest rates. And it's not just the interest rates as well, is it? It's not just yields. Some countries are easy to do property in. I mean, like the UK is quite easy as a country, isn't it, to do property in. Some are a little bit more difficult. So let's talk about that. I want to talk about my experience in Japan or getting into Japan. I'm an investor in the UK. I live in Japan, and the reason I want to get into Japan is because I want to spread my risk a little bit. So having all your eggs in one basket is never a great thing, especially currency-wise. If all my property is in pound sterling. What would happen if the UK economy crashed or there was some currency crisis? I could see my net worth wiped out. Even a 20% drop in property prices in the currency value could see a massive impact on my net worth. So it's good to have a balance. And that's what I want to talk about today. So I want to talk about a bit about Japan and the property market.
Before you go on, do you think that Japanese yen is a stable currency then? Would you consider that a currency that, because you're investing in that, it sort of balances out your portfolio with the UK, the British pound, or?
It would balance out with the British pound, because that, if you've ever sort of traded currencies, the yen and the pound, that currency coupling is called the widowmaker. And it's called the widowmaker for reasons, because it goes from extreme to extreme, like really high to really low.
Okay.
The pound and the yen tend to sort of go opposite to each other. So when the yen's high, the pound's low, and the pound's high, the yen's low. So they having them together counteracts each other. So you rarely find both the yen and the pound high or the yen and the pound low. They seem to sort of counteract each other. So they're a good balance. So I wouldn't it's always dangerous to put all your wealth in one currency, like the pound, British pound, or all into yen. You're much safer, better off having it all in US dollars. But even better still, have it across multiple currencies. So I think, two currencies are better than one, to answer your question, right?
Cool.
So there you go. So there's a starting point. Let's talk about, I want to focus on Fukuoka, which is a city out to the western, the western provinces, the western regions of Japan. And this is Fukuoka here, Eric. If you take a look at this, this is sort of the city of Fukuoka. And if you guys in the, just going to clear up my desktop here, you guys in the group can see this. So it's a seaside city. It's a very desirable place to live. It's on the most western part of Japan. And it's the equivalent. And if you sort of imagine Japan geographically as the US, Tokyo is New York, Fukuoka is San Francisco or LA. That's geographically how it lies out. And there's a reason why that's kind of important. The first one is just that Fukuoka is the dedicated startup city in Japan. So of all the cities in Japan, the Japanese government has decided that Fukuoka will be the place where they're going to experiment with startups. So they're doing a lot to attract foreign talent into Fukuoka. You can go to Fukuoka and get a startup visa, which really all you have to do is turn up to Fukuoka City Hall with a piece of paper saying, this is my business plan, and they will give you a visa. Seriously, it's that easy. I mean, this will change over time because they're so keen on getting foreign startup entrepreneurs into Fukuoka that they're going to bypass all the traditional visa restrictions in Japan. So if I was an entrepreneur, I went anywhere else in Japan. I went to Hiroshima, Osaka, Nagoya, Tokyo. I would have to go the traditional route, which is present a business plan and show, my savings, show my investment, show my experience. But if I went to Fukuoka, I could just literally say, hey, I'm starting a business and my business is I'm making, an app or I'm doing some kind of wood cutting, and they would give you a visa. Seriously, it's that easy. Obviously, that's not on tape. That's not official, but it is pretty easy to get a visa there. And there's funding as well now. So what's happening in Fukuoka as well is that they have a startup fund, which they're lending money. And I know this question's been asked about interest rates, but this is important. They're lending money in Japan at 1.3%, which by comparison is I don't say it's free money, but I mean, how does that compare to the rest of the world? In the UK, for landlords, what, maybe 4%, 5% if you're new. I don't know what it is in Indonesia, Eric. 1.3% is pretty damn low, right? That's
right. Yeah,
as low as.
Well, I some numbers in a second. So, I mean, in the meantime, what I can mention about interest rates is that my experience so far is if you're starting out, for instance, in the UK, expensive money like bridging, that's a year right now, very expensive. We're trying to refinance our portfolio there now, which is a commercial loan, and then you're 0.5% range. If you would be able to get like residential mortgages, so normal, mortgages for buy-to-lets as they call it in the UK, I think the rates are around 2.5%. UK interest rates are slightly up because of the insecurity or uncertainty of the Brexit. In Holland, normal residential interest rates for mortgages are 1 or 2%, very, very low.
But that's for a private mortgage, though. That's not for a buy stock.
Yeah, that's not for commercial mortgages. So I don't know exactly there. In Indonesia, if you can get it for a private home, it's between 11 and 13% per year.
Wow.
Interest rate.
Yeah. So when people are offering mortgages at 1%, it's good news, right? Now, I'll talk about my situation. I don't have access to the mortgages here. If I had a job, quote unquote, in Japan, I would have access to these mortgages. But I don't, and it's difficult. If you're a foreigner and you are not in any kind of traditional employment,
right,
you're pretty much on your own. But that's not a problem. So I'll talk about, why I'm looking to invest even without a mortgage. So I'll talk about that in a minute. I think it's important to understand first, I'm a fundamentals investor, and I want to talk about this. Hopefully this should be up and now. This is the population of Japan. This is like scary reading. When you invest we talk a bit about this in the Lazy Money Machine book, fundamentals, how important fundamentals are. I mean, we talk about things like Bitcoin or, stocks and shares, et cetera, et cetera. But, the thing is with property is the fundamentals are so important. And one of the most important fundamentals is people. There will always be people. Unless, for example, you're in Japan where the people are dying out. And here's the problem, right? Where we are on this graph, we're about right at the peak, 127 million population in Japan. Now, the population in Japan is going to fall from 127 million today to about 87 million in 2060. So in the next 40 years, 40 million people are going to disappear out of the market. Now, there's 40 million people, probably younger people, renting, people who are, the market for renting, it's just going to have a phenomenal impact on Japan. So a lot of people are really hyped about buying property in Japan. And I say to them, look, the property fundamentals in Japan are terrible. Like, you look at what the market is right now, it's overhyped, overheated, overexpensive. However, stick around 20 years and the market is going to be flooded with empty properties.
Right.
Because what's going to happen is landlords are going to buy properties and they're just not going to be able to find tenants to rent them. Japan doesn't have any kind of immigration per se.
Yeah.
The people aren't having babies. Everybody's getting old. The average age in Japan is about 107, whatever it is. It's a really bad fundamental situation. So you probably think, why the hell would you invest in Fukuoka? Well, Fukuoka and Tokyo are the only two cities in Japan where population is increasing. And Fukuoka mainly because of immigration, so entrepreneurs coming, like I said, and a lot of people are moving out of Tokyo and the bigger cities to Fukuoka to, start web design companies or internet marketing companies where they can work anywhere in Japan. It's cheap, it's near Asia, and it's open for business. So That's why I'm bullish on Fukuoka, where the rest of Japan.
Graph, because we can't see the graph. Look at the graph before we move on to the next part of.
You see it there?
Yeah, now we see it again. Yeah.
Right.
So yeah, basically, basic issue is all over Japan, population is decreasing because of low birth rates and people getting very old, right?
Yeah.
Except there, because there's a lot of inflow of people. That's what you're saying. So that's why you're bullish about city.
Exactly. And you know, where there's an inflow of people, foreigners have a special housing requirement. Japanese housing is pretty poor by most standards. You know, a lot of the houses just built out of, you know, cardboard, more or less. They're really badly designed, but the conditions inside are quite bad as well. So, you know, if you're American or European coming to Fukuoka, you're not going to settle for what is a Japanese tenant would settle for, right?
Okay.
There's going to be a lot of people coming to Japan and they're going to be looking for apartments, places to live in Fukuoka. They're not going to like what they find because the Japanese landlord doesn't understand the needs of a foreign tenant. You know, Japanese property is very sort of feudal, where, you know, when you rent a property in Japan, you not only need to pay deposit, you have to pay key money and you have to pay a gift money. You have to give a gift to the landlord, right? I'm serious. Like when I came to Japan and we were renting, it's like, no way. I'm not paying this to the landlord. What am I paying this for? You have to pay like 3 months rent in some cases, plus 2 months rent gift, plus 2 months rent or 3 months rent deposit. So you could be paying up to 8 months rent up front, of which only 3 months is deposit. You lose 5 months. It's like a gift to the landlord. It's that sort of feudal system where, you know, the landlords, it's very different from the UK. You know this in the UK, Eric. It's like, you know, the UK, the landlord is nothing like he used to be, right? He's not like the king of the castle where, you know, in the UK, the tenants are so demanding. But in Japan, it's like, oh, thank you so much, Mr. Landlord, for allowing me to rent your property. So it's a very interesting market in that respect.
Okay. So you would be looking then at properties that are living up to this standard of foreigners that are coming in and willing to or thinking about renting there, right?
Yeah, I'm looking at simple one beds. Size-wise, they're very small. I mean, I'm showing some typical examples now. I don't know if you can see this on your screen. So I'll show you some of the typical examples. Interesting, you can't have a look inside these because Japanese law means that if you buy a property, often you buy a property with a tenant in it. And you're not allowed to go and look at it, which is crazy. So it's a gamble. If you're a landlord, you're taking a gamble. You know, it could be, I don't know what you could find in there, right? But
yeah, but that can be the same. You can have the same situation in other countries. I mean, if a property is tenanted with somebody in it, you always have to be very go and see it. I can still remember when I was on my mentoring, see an HMO, so a home of multiple occupation with multiple tenants in it, and there was one guy that grudgingly let us in viewing. But he was saying, you know, who's the guy that's coming for the viewing? And it was my mentor that had registered and said, well, then you can't come in. So you always have to be sensitive. And if people are living in it and they don't like it, of course, that the thing is on the market and is up for sale. So when there's tenants in the building for viewings and seeing things inside, it's always a sensitive issue, I think.
Exactly. Yeah, not easy. I mean, that whole idea of a sitting tenant, as it's called, it can be quite dangerous if you get it wrong. If you get a really bad tenant, you could be in trouble, right? You know, especially if they have sort of sitting rights to live there for the next 5 years or something, which some case they do, right? So that's sort of standard in Japan. So I'm showing you, what I want to do is show you a typical example of a property, which I would say, I mean, we'll go through some of the numbers. But I want to show you this example because it gives you a feel for what the kind of yields are in Japan and what kind of the property market is like in a good market, in a good city like Fukuoka. If I was to show you another city, it could be very different, but this is a good market.
Okay.
So this is in a 1-bedroom apartment in Fukuoka in Hakata, which is like right next to the bullet train station, which is kind of important, right? Because you've got to be near the station for value. Okay, 1 bedroom, which is big by Japanese standards. So this is 20 meters squared, right? 200 square foot.
It's there's a bedroom in it.
Yeah, a lot of these are studios, really.
Yes.
Yeah, I mean that's sort of very typical studio.
Right.
But they call it a one bedroom. It's not really. It's really a living room, dining room, bedroom all in one. I mean, it does have some pictures in here. You can have a look. It's not very generous with the pictures. It's actually, this is the kitchen. Should I sort of zoom in here? I don't know if you can see this. No, we can't really see this, but
yeah, I can see it now.
That is the kitchen, which is really, there you go.
It's like a cabinet with a with a sink in it, right?
Right, and that's actually a well-appointed kitchen by Japanese standards.
Okay.
Right. Okay. Just kind of reset this. So, yeah. So that was the kitchen. That's an example. So these are quite interestingly. These are called mansions, which they're absolutely not. But that's what the Japanese call them, right? So I'm just going to close this one down.
And what kind of price are we looking at here for a 20 square meter unit? Japanese yen price. What does it translate to in, let's say, dollars?
$4.5 million. So that's about $45,000.
$45,000. Okay.
Right. Yeah.
And what kind of rent would you be able to get?
Right. I'm just going to walk you through the figures on those.
Oh.
Yeah.
I don't want to get ahead of it.
No, that's fine. But take a look at this one, Eric. This is 1.5 million yen, which is $15,000.
Right.
I mean,
it's cheap.
These are the bottom end of the market.
Right.
The problem with Japan is there's a lot of fees. So 1.5 million doesn't become 1.5 million, right? So this one is an example, 20 meters squared, 1.5 million yen. It's in a mansion of 10 rooms. Get bike parking. Well, that's a big deal. It claims a yield of 19%, which is rubbish. I mean, that's complete hype. But there's always, when you buy a property in Japan, there's always a lot of fees. There's the purchase fees are quite high. But there's also a lot of ongoing fees, which are, in this case, quite low. But usually there's a lot of, maintenance fees, the freehold fees, all that sort of stuff. So there's the floor plan of this one. It just goes to show what these units are like. So that's your living room.
Yes.
That's your balcony. That would be the kitchenette. The bathroom is really a cupboard. And there's what they call the genkan, which is the area you walk in and put your shoes in. You obviously don't put your shoes indoors. They're selling the whole unit at 18 million, so $180,000 for 10 units.
1,000 for 10 units, okay.
I mean, it's just incredible, really, how cheap that is. I mean, it's not a great area. But it just goes to show, I mean, there aren't many places in the world you can get $180,000 10 units, right?
How old are these?
So these are late 80s, 90s. So this is 1989. Now, if you're buying with a mortgage in Japan, you have to be conscious of the structure. So whether it's concrete or wood or stuff like that. The mortgage lenders are very particular about that. But in this case, steel reinforced concrete is the best. I mean, it's ugly as hell, but that's the best for the lender because, you've got to think about things like earthquakes as well. And seriously, in Japan.
Of course.
And I mean, same as Indonesia, but if it's made out of wood, there's all kinds of risks involved as well. And there are a lot of, wooden buildings, obviously not with apartments, but you know what I mean? It's like, it's a consideration. So to your question about the rental, I'll go back to that one that I showed you earlier. I've got my numbers here, my spreadsheet.
Okay.
And let me just close some of these down because my internet's pretty slow. So I won't go through all of this, but that was the 4.5 million yen.
Mm-hmm.
1 bedroom. The purchase costs are about 20%. So bringing you to a complete, I don't know if you can see this well enough from the screen or whether it's too small. Do you want me to zoom in a little bit?
No, it's fine. I think we can read it. Yeah. We are, if you go a lot further down in column B, and so, but it's fine. Otherwise, it's fine.
All right, I just shifted across here. If that makes sense. All right, go. So it's 5.5 million. So you're a 1 bedroom you're purchasing for about $50,000.
Yes.
And you've got all these ongoing costs, monthly ongoing costs. The complete annual rent is, according to the estate agent, obviously, it's going to be excessive, but the complete annual rate is 500,000 yen, which is $5,000. So you're buying for 50,000, rent's about 5,000, right? However, fees are quite high in Japan, so there is, for example, payment to the landlord of the building, so the freeholder, the leaseholder, right? Which is about $80. The sink fund, which is, paying for the communal areas, another $60 a month. And you've got all kind of fees like rent management, which would be the same anywhere in the world, 10% of your rent, maybe. This case is quite low. It's at 5% of the rent because managing rental tenants in Japan is very, very easy. They never complain. They never contact the landlord, et cetera, right?
Okay.
So, I mean, it's one of the reasons why landlords make a lot of money here, right? Because they don't do anything. So, it's only at 5%. Proxy fees, again, these are kind of fees you have to throw in, like insurance and so on. Unforeseen costs. So, what I've done with all my figures is I've factored in quite a large amount of unforeseen costs, which I think, in any estate agent, if an estate agent gives you a breakdown on the numbers, they'll always leave this part out. This could be replacing a boiler, replacing whatever, carpets, whatever it may be. But there always are unforeseen costs, and I'm always quite aggressive with putting these into the numbers, right? So it's almost like 50%, let's say in this case, your fees were, 20,000, 200,000 yen. I've put in like another 250,000 unforeseen cost on top of that, right? And lastly, there's a fixed asset tax in Japan, which means that if you own a building, for argument's sake, $100,000, you pay 1.6% every year as a tax on that building, right?
Okay.
Regardless of what you do with it. Okay. So it all comes out with a total return of 250,000 yen for a total net yield of 5.7%.
Right. So I understand, because the annual, so row 13 is the annual total cost, and then you have your unforeseen. You've added that on top of it, or how did you do that? Because if your total income is 500,000, what's your total expenses that you're taking into account?
Yeah, sorry, my mistake. I was my brain wasn't in gear. The unforeseen, I've added 15% on total onto the total cost. Yeah, which I think is So it's about I mean, these numbers are quite low. If you think about it, you're paying 2,000 in costs. I mean, the rent's only 5,000 a year, 2,000 of which is in cost, and then there's about another $300 in unforeseen.
Yes,
because unforeseen in Japan, as I said, there's so little. Like here, where we rent, if anything goes wrong, we have to pay for it. The landlord won't do anything. That's sort of the rule, unless it's structural. So you're pretty much covered there. But I think even what I'm saying is that 15% I've added in, if you go to the estate agent's figures, they won't put that in there. So you have to be very careful, because that 15% might be the margin you're working with to make the deal profitable.
Yeah, of course, yeah. Yeah, I mean, that's a general tip. I think in future episodes we'll look at other deals as well in other countries and just go and try to analyze that. But if you take a brochure from somebody that's trying to sell you an investment, like a real brochure, And I've come across it. I mean, I get these things all the time because I'm all sorts of mailing lists. And then I look at these numbers and then you 10% yield, 15% yield, 12% yield. And I go, there's something that they don't tell you. And you need to be really careful about that. So I think this is a typical one in Japan, ones in the UK as well that they don't put into the figures, right? Numbers, I think, like you're doing here, and really question, have I got everything in here? That's really important.
Yeah, because the yield they give you is so much higher than what it actually works out as, right?
Yeah.
And that can make a huge difference because, you could end up with a negative yield in some cases, right? So.
Okay. So you end up net return, between 5, really good one, but let's say average 4 to 5%, right? Now, would you still consider doing a deal like this or not?
Yeah, I would, because that's a really good question, because if that was in the UK, I wouldn't touch it. 4 or 5%, it really isn't a lot. But my reason for investing in Japan is not because I'm seeking a great return, but I'm seeking a hedge. So, there are many, many better deals out there than 4 and 5%. I could stick it, even into some bond. I could put it into a bond and get a better return, right? And especially because it's my own cash, I've got no leverage on it. Mm-hmm. But as a hedge, I could take some of the money out of UK, put it into Japan, and it will sort of balance a little bit. I mean, it's only a small percentage of what I have in UK, but it's a start, right? So, yeah, I mean, I get your point. These are not great deals as standalones, but my rationale is that money is better in a different currency, in a different country, even at lower rates.
Okay. And do you appreciation on the building? So do you foresee that these units will become more valuable over time?
Yeah, but the numbers in Japan are a bit strange. I think, looking at the fundamentals, it's important to really, I mean, of all the places in the world, it's most important to focus on the rental income in Japan, because you could easily, you could have bought a property in 1980, which is now half the value of that still, 30, 40 years on. It had a big bubble. And also in Japan, when people buy properties, they tend to knock the property down. I mean, obviously not these apartments. Mm-hmm. So their sort of relationship property values is a bit different. Like in the UK, you kind of expect it over the long term to go up, don't you? Of course, yes. You would invest for income always, but the capital appreciation is a bonus. Whereas in Japan, I think you almost have to expect that the property value might stay the same or go down.
Wow.
So you have to kind of, I mean, I don't think it's going to go down in Fukuoka because of, I'm banking on the fact that good fundamentals there. I mean, that could change. Kim Jong-un could fire a missile at Fukuoka. There's lots of uncertainties, right?
Okay.
For now, it's pretty good based on what I know.
Yes. Now, one last question about the numbers from my side is, this is assuming 100% occupancy and 100% collectible rent. Is that a principle you would?
So, no. So for example, the rental. So I've assumed, in this I've assumed 12 months rent.
Right.
The reason is, I mean, when I do the numbers in the UK, I often assume 11 or maybe 10 and a half months in a year.
Right.
Because that's sort of, you're going to have void periods. But in Japan, void periods are extremely rare.
Right.
And non-payment is extremely rare.
Okay.
So.
Is that a cultural thing or what is that?
Yeah, I mean,
it is.
Yeah, when we said at the beginning, you can't get into the property. Properties are always occupied in Japan. They just they're not empty. Obviously that's going to change in the future when people start dying out. But
yes,
an apartment doesn't remain empty if there's a demand for it. It just goes straight away. People rent for 2, 3, 4, 5 years. So it's all kind of guaranteed. And then the cultural aspect of non-payment, obviously it does happen, but it's extremely rare. People don't disappear. In Japan, people will sign guarantees, and the guarantee means that if you don't pay, your family back in Tokyo are going to pay. So that's a big issue in Japan, is that they'll come after the family for the money.
Right.
So I think, it's pretty, of all the markets I've dealt with, it's pretty, that aspect of it, void periods, non-payment, it's a very, very small percentage of it. I mean, you could factor it in, you could put in 5% just to be safe, but even that's being aggressive.
Yeah, because that's the other thing I wanted to, like, as a general remark about when the other thing you always need to do when you look at numbers is do like a stress test, right?
Yeah.
What happens if, right? What happens if there is a 2 or 3% void? What happens if, all of a sudden you do need to do a lot more maintenance on the project? Will that kill the numbers or not? In the UK, mostly it's like if you're borrowing money, what happens when the interest rate goes up?
Yeah.
And banks would look at that as well. They would see, like, after you have repaid us, being the bank, how much room do you still have before you're underwater with repayments? But obviously, this calculation we don't take into account a loan. But I mean, when the yields are low at the bottom end, you always need to really carefully look at, okay, is it still, can it still survive a stress test of my costs going up or my assumptions being worse than what I think, right? How do you look at that?
Yeah, I mean, stress test is good as well for yourself, isn't it? I mean, I know it's a stress test of the property, but it's also a stress test of you, isn't it? It's kind of, the things do happen, interest rates change, things need repairing, all kinds of unforeseen circumstances will come up, which you can't control. So if you give yourself a very small margin, and I did this when I started in property, one of the first properties I bought, the margins were really low. The yield,
right.
The net yield was quite low. And so even though at the time interest rates were going down over the long term, it was just quite stressful because if there was a void period, the whole thing got really stressful because, you had to make everything work 100% to make a profit. So, if a tenant dropped out for a month, that's your profit gone for the year. You could lose, if your margin was 10% and the tenant disappears or ends early or whatever, you lose a month's rent, and that's quite stressful. It's like a whole year is wasted. So I think it's important to stress test for yourself, your own purposes, right? Because I know a lot of people go into property deals, and I mean, I did this. You try to want to make it work, don't you?
Yeah. Yeah, I'm in it the complete opposite way in the UK at the moment because we're paying amount of interest at the credit facility we have, and we're still marginally profitable. So the way that I went in as a new investor in the UK, I know I can't get access to financing the way I want to, but I know that in the long term, these numbers, a lot significantly. And by that time, my portfolio will all of a sudden be a lot more profitable. So we're now looking at, I think we're currently, because we are indexed against the base rate, we're currently paying, I think, 9% a year in the UK on our loan.
Wow.
And we've borrowed about £1 million, so we're paying 90 grand in interest. But that's about to go down to 4 or 4.5%. So that means that all of a sudden I'm making 45,000 more profit in a year on the whole portfolio. That's a lot.
Happy days.
Well, yeah, but I mean, you have to know where it's so important that you understand this. You start with small deals and you know what kind of things you're getting into. I understood that this would be happening, but it's like a stress test the other way. We're at the low profitability side of the deal right now, but it will improve once time goes by.
Yeah, if you can optimize it, right? That's really important.
If you can optimize it.
I mean, optimization is so important, I think, in the long term.
And about borrowing, how do you say it, lending or borrowing money for deals like this?
In Japan?
Yes.
Well, if you're a foreigner, and you don't work for Sony or Mitsubishi, forget it. It's very conservative. Okay. The thing about Japan is it's had, like the US and like the UK, there's a lot of quantitative easing. So where they've been printing money non-stop for the last few years. So what's happened is the Japanese government has printed a heck of a lot of cash. That cash had to go somewhere, and eventually now that cash is filtering out into the residential market. So if you check the boxes, you can get some very, very good terms. As I said, like 1.3%. And people can get 107% loan to value.
Okay. I mean, in the UK, there's a course from the company that I've used that's called Creative Financing.
Right.
And it sounds very dodgy, but it basically teaches the legal instruments of borrowing outside the common. Right. Would that be something you could consider to either, put a deposit in the bank and then, or work with vendor financing, whereby you go to the seller and you say, look, I'm willing to buy this from you, but I'm going to pay you over 3 or 4 or 5 years. Those kind of structures, would that be something that you would want to consider trying to do or not?
Yeah, I haven't really thought about vendor financing because, the language barrier is obviously pretty big. And I don't think Japan's not really advanced in terms of that part of the market. But I think, a lot of the distressed stuff doesn't surface on the public market like it does in the UK. There's an established distressed market, and those are the
people love it there because they know they can fix it, right?
Right, exactly. And it is, if you're into vendor financing, that's the place to go and find it, right? That's a great place, or in the commercial market, right? But I don't know the market well enough to be able to go out and seek out vendor financing. It's pretty technical. But that said, it's there, right? I'm sure. For those who understand it, it's good there. In terms of non-traditional vehicles, again, Japan's not very developed in terms of its products, and it's very sort of closed. It'd be very difficult to get a loan from outside of Japan to fund acquisition in Japan.
Right.
That's why, for me, it's cash. And as I said, what my rationale is for doing it, it makes sense, right?
Yeah.
But yeah, I mean, exactly. I mean, in the UK, I've gone through that route with non-traditional financing, and it makes complete sense. But it's so, when we started this session, Eric, we talked about it's not just about loans, it's not just about yields and rental returns and so on. It's also about how developed the market is. So, like in the UK or Australia. Or the US, for example, the property market is really advanced, really developed. So you can, for example, get things like bridging financing, or you can refinance quite easily, or, you could do all sort of creative structures for your property deals because the market's much more developed. I think in Japan, it's still quite traditional.
Right. Maybe another aspect that I would like to hear something about are the legals involved with. Are you allowed as a foreigner to own these properties outright?
Yeah.
Oh, you are? Okay. Is there no restrictions at all?
No.
Because in Indonesia, for instance, they're slowly starting to ease these restrictions, but they're still far way off from me in my personal name being able to buy any property. So the business we do here is in the name of my wife, who's Indonesian, where there are no restrictions. But for me as a foreigner, there are definitely restrictions. And then there's the other problem here whereby these restrictions are being eased in legislation centrally into your local notary to try to implement them. That doesn't always seem to be working as well.
That's
so there are, like, if you want to do it professionally, like through a company structure, you can. So you can set up a limited company and then own land and buildings underneath there. But for me as a foreigner, it's quite restrictive in what I can buy here.
Yeah, there's a similar situation in Thailand, isn't there? That you can't own, I think you can own 49% of a company or any kind of asset. I think, isn't it something to do with the WTO, World Trade? Like when they enter the WTO, they have to allow complete foreign ownership of, I'm not sure. Like, for example, obviously this is an issue when these countries enter the agreement, they have to commit to that. So I think that's why Japan has, as far as I know, maybe there's exceptions.
Okay, and then another side of the legals that I would like to ask you is that, okay, if you go and buy this, what kind of security do you have that this is a legal, no, not legal, but a valid transaction? So is there, I'm just asking because I've experienced different sides of the coin. If in the UK, for instance, your lawyer or your solicitor, it's called there, and the seller solicitor go and battle out, a paperwork war for two weeks to go and make sure that whatever the deed is that's basically sold a valid one.
Right.
And in Indonesia, there's none of that. So I need to do my own due diligence through my own network. So the only thing that the notary, which we use here, checks is whether or not this land certificate is registered in the central register of land certificates. That's the only thing. He doesn't check whether there's flood risk or strains or anything like that. How is that in Japan? Is there any, if you do buy this, what kind of, how safe is it?
That's a really good question. I don't know the answer to that. I mean, I'm only going to know by doing it, right? From what I understand, my research and the people that have done it, it's pretty robust here. I mean, the Japanese legal system's pretty robust. They're pretty, they have a pretty good attention to detail here. But who knows? I don't know. I'd really like to know the full process. But I mean, even in the UK, it's difficult to know what the full process is until you do it.
Yes, yeah.
Right, you have to actually do it to really appreciate what's going on and to understand it.
Right.
It's the same with Japan, especially when it's all in Japanese. Right. I mean, I could speak Japanese, but legal Japanese.
That's tough. So how are you planning to deal with that?
My wife.
Okay. Yeah. All right. Yeah.
Yeah. I mean, exactly. I mean, the good thing is that there are English speaking lawyers here as well. So
yes.
Some of them are educated in the States, for example. They speak pretty good English. So.
Okay. And if you look at the Japanese market, do you feel that there is a lot of property investment activity? So people like you looking at deals, etc., or do you mainly see it as like a homeowner kind of buying market, people that buy their own houses instead of landlords renting out?
Yeah, that's a really good question. And how do I put it? In Japan, there are the homeowners, obviously. That's a big market. As investors, I think, I don't know where the parallels are, but it's interesting. For example, if you talk about Robert Kiyosaki, Rich Dad, Poor Dad, and, the book's available in Japanese, and Robert Kiyosaki is obviously second generation Japanese, so it's not too unfamiliar to them. Mm-hmm. If you mention that, people's immediate thoughts about property and those kind of people is scam.
Really?
Yeah, Robert Kiyosaki has a really negative image here in Japan because this is a part of his history as well, but he got heavily associated with MLM, multi-level marketing. And MLM in Japan has a very, very negative, it's like you meet these people, you haven't met this person for 20 years and they're like, hey, let's go for coffee. And, you're having coffee and they open up the bag of nutrient supplements, right? And do you want to sell this, all that kind of stuff? That's how it works here. Robert Kiyosaki's name, for whatever reason, is associated with that here in Japan. So back to the point, property investing has a very, I don't think people don't invest in Japan like they do elsewhere in property. Like if you go to the UK, people invest in property because they understand this is my pension. Or this is passive income. In Japan, people don't do that apart from a small group of people. Interestingly, a growing number of Chinese. Chinese people come here.
Yeah, not surprised.
Yeah, they don't give a shit. They don't give a shit about the reputation. They understand it makes money, right? And it's a market ready to be taken. Because the Japanese,
they might not be very loved as well there, I'm sure.
Exactly. They've got over that. So, there's a very negative attitude towards Chinese here as well. So, yeah, but they understand. They don't care. They're not going to sit and watch the market. They're going to take it. I mean, some of the biggest property investors I know in Tokyo are Chinese, right? So, yeah. I mean, that whole sort of thing about, okay, I'm going to buy a property, I'm going to make passive income. I don't know people who do that here.
Okay. Well, that's good. That's a good opportunity then. If you do it, I mean, then you're one of the few.
Right.
To you, right?
Exactly. Yeah. I mean, that sort of goes back to the whole point about, doing it, especially for foreign investors, so foreign immigrants, coming over. So I think as well, because, because the people who get into property on the investment side tend to be the kind of people who don't give a shit, then they also don't give a shit when it comes to tenants. So,
right.
Do you know what I mean? It's not like in the UK, it's a lot more developed. It's a lot more of an open market, isn't it?
Yeah.
So here in Japan, it's like it's the sharks.
Yeah, and I think in the UK, what's changing a lot is that landlords used to have a really bad name, the exploiters of buildings and whatever. But that's especially since the arrival of social media and places where people go for rooms. I mean, if you're not a proper landlord, you'll definitely be singled out by the tenants at some point. That's not acceptable anymore, I think. There. Yeah, exactly. I mean, and in general, I think it's bad business to do it that way. Yeah. So if you're the opposite, and if you do take care and out there, right? I had one other thing that just popped to mind. So in big cities like Japan, many cities are big, but like Tokyo, for instance, is there a lot of off-plan development going on, or because of the shrinking population, even big scale developers are careful in doing new developments? Yeah,
there's a lot of off-plan here. Yeah,
there is a lot of off-plan. Okay. A lot of off-plan. Is that an opportunity that you would look at or not?
I think Tokyo is a crowded market. That's why I'm interested in Fukuoka, because
Fukuoka, there's no off-plan development.
There is, but it's quite. I mean, that's maybe where you could look for vendor financing.
Okay, I might go into a bit of jargon here. But off-plan is basically where if you get shiny brochures and nice pictures, that. Right. Big scale developers that are offering new things, new flats or new apartments or new landed houses that they put on nice brochures. That's off plan, and you usually buy it before it's ready. Right. There are ways to make money with that, and the main way to make money with it is if you're a trader, right? If you buy it when it's being built, and you basically exit again once it's done. That's usually a 20% or 15 to 20% uplift if you do that.
Yeah, I don't know how it is now, but when I looked at off plan, when it was popular, sort of in the UK, it really started expanding fast 15 years ago, 20 years ago. It was vendor financing.
Okay.
So you could really get 100% mortgage.
Yes.
From if you look at what the developer needed to do, they just needed cash for the next round. They needed cash for the next stage of development, didn't they? So
yes, yeah.
They were desperate to sell the first 10% of houses.
Yeah.
So they could get cash for the next 20%, right? That's kind of how it worked. Yeah, I don't know the situation with off-plan of Fukuoka. There is off-plan. I wouldn't go into Tokyo because of it's a crowded market. There are deals, but it's not,
Yeah. The other thing why it's always, I think, in my personal opinion, a good idea to have a look at whether there is a lot of off-plan stuff going on. Because if you're considering buying a 20-year-old flat, a lot of off-plan new development, you might not be the most attractive unit in the block anymore.
Right.
If right next to you there are new units going up, even though they might be more expensive or more expensive to rent, they're usually more attractive for you might have a pool of tenants that is pulling away from the thing that you're looking to invest in into some of these new builds.
Yeah, exactly. Yeah. I mean, have you considered off-plan?
The place where, to be honest, I've been very skeptical about it always. But coming to look at it again, and if I would want to do part of my strategy just as a trader, whereby I buy these things off plan, the good thing about it is financing, you don't need to have to pay the whole lot up front, but you can pay it over the year, a year and a half, or 2 years that it's being built. You can interested to do it.
Right.
And actually, I was thinking about maybe bringing that example up of student accommodation being sold off plan in the UK now, promising guaranteed 10% annual returns. I think it might be good in another session to go and dissect these figures, because the one big thing that they forget is they say, you can sell it at the end, but how do you sell one student rental unit in a big purpose-built complex, right? They're not that liquid. And that's usually, forgotten. But if it's like an apartment or a flat somewhere, I would, which is just in a normal residential area, I would definitely consider it. Because I would want to have the exit, because the rental returns would probably be not that high.
Yeah. I mean, you got to remember, as you said, like when your property in a development comes onto the market, you're coming onto the market with 20, 30, 100 other units, right? So they're all competing with each other. Yeah, I mean, off-plan's really interesting. It's very attractive, I think, emotionally. You've got all the marketing and the marketing suite and stuff like that. I mean, we talk about this in the book, don't we? Like the cat piss carpets. It's like there's no uplift there in an off-plan. It's all priced in, isn't it, really?
Yes.
Unless you're sort of, like you say, maybe trading it, which is a different kind of mindset. I mean, I'm not really geared towards that mindset.
Yeah.
Yeah.
Cool.
Well, hopefully that was useful. I mean, just to share some numbers on Japan, because I think it's always useful to kind of just get a benchmark on markets. And
right.
it would be good to, in the future as well, share some other markets. I mean, you should share some numbers on Indonesia. But I think, as we go on, it'd be great to get some comparisons around the world, just out of curiosity.
Yeah. And also, I think if there are people in the group that are interested in certain markets, let us know. I mean, we can definitely also have a look at some other, go through some. What would be good at some point in the future, these offers that are for investors to have a look at that. And I've got some friends who have invested in some of these things, both in the Netherlands and in the UK. They have bought these student units. And I think, it's not all bad. I mean, I'm not trying to dismiss it, but it's always good to then have a look at it. What could it work? Because like we said in the book, it's good to get 3 or 4 of these units under your belt. And for somebody starting out, an off-plan development with a decent rental yield could be a real.
Yeah.
Excellent. So I think let us know what other markets you want us to look at. If we don't know it ourselves, we might be able to find somebody. And otherwise, we can always certain areas and see what we find.
That would be fun.
You've been listening to The Lazy Money Machine. Find out more at lazymoneymachine.com.